Hello everyone, and welcome back to the Financial and Lifestyle Freedom Podcast with me, Annette Ferguson. I hope you're having a wonderful week, or depending on where you're listening, I've had a wonderful week. For me, this last week as I'm recording, we've had some lurgy back in the house, but it is that time of year, so we've been fighting off that a little bit. But touch wood, everyone seems to be on the mend now. Now, today's topic is tax planning strategies for UK small business owners, how to save money and reduce your tax bill. And of course, this is a topic that is on every business owner's mind at some point or another. And as we approach the end of the tax year, or at least the submission period is drawing closer, it can be crucial for small business owners to take a proactive approach to tax planning, reducing tax bills and keeping more money in your pockets. So as I said, in this episode, we are covering essential tax planning strategies that will help you optimize your tax position, maximize your allowable deductions, and prepare for the upcoming tax year. So whether you're starting out or you've been running a business for years, this episode is packed with actionable insights to help you save on your tax. Let's start with why tax planning is so important. Many business owners wait until the last minute to think about tax, and by then it's often too late to make any significant changes. Proactive tax planning allows you to take advantage of tax reliefs, allowances, and deductions to lower your tax liability. For example, if you start planning early, you can allocate expenses strategically, maximize your pension contributions, or even adjust your dividend payments to minimize your tax bill. The goal is to optimize your tax position both for you and the business, so you can potentially reinvest more in the business, get more money out, or give you more options. So one way to get started is by making sure that you do download our free comprehensive tax planning toolkit. The link for that is in the show notes, and this will help you outline your tax planning strategy for the year. Now let's talk about deductions and allowances. Many business owners overlook potential deductions, which means they end up paying more tax than necessary. People often miss out on claims for expenses like mileage or use of home as office, especially when they are doing this themselves. If you use your own vehicle for work travel, you can claim up to 45 pence a mile for the first 10,000 business miles by car, 24 pence by motorcycle, and even 20 pence by bicycle. But you can't claim for journeys between your home and your standard place of business. Now, by claim, what I mean is that the amount is tax deductible and it is actually payable back to you personally. Working from home means that you can claim a portion of costs. There are two ways to do that. One is a simplified method and the other is the actual costs method. So you can use the simplified method when you work for 25 hours or more a month from home. And the allowable HMRC rates are 25 to 50 hours, £10 flat rate per month. 51 to 100 hours a month, it's £18 flat rate per month. And 101 hours per month plus it's £26 flat rate per month. For the actual cost method, you can calculate and claim the exact costs you have from working from home, including a portion of your electricity and gas bills. Many people, however, like to try and add on things like council tax and mortgage payments in this calculation, but you have to be really very, very careful and not end up putting your home into capital gains tax by doing this. So I advise, if you are thinking about doing the actuals method, you really do need to consult your accountant to make sure you're not going to cause problems for yourself further down the line. As with mileage, the working from home amount can be made as a payment to you and included in the tax return as a tax deductible amount. If you run a limited company, don't forget trivial benefits. This is a benefit that many business owners overlook and many accountants don't even speak about. Trivial benefits are where you can take an additional benefit from your business with no tax consequences personally, and they're tax deductible for corporation tax purposes. You can provide yourself this benefit for up to £300 in each year. And the criteria is that it costs you £50 or less per instance to provide. It isn't cash or a cash voucher. It isn't a reward for work or performance, and it isn't in the terms of your contract. So what we recommend is that you gift yourself every 2 months from your business, because that will get you up to the £300 level, £50 in vouchers. So you buy vouchers in £50 increments from your business and you gift those vouchers to yourself. The cost of the vouchers is tax deductible for the business, and there is no tax consequences on you as an individual receiving them. Personally, we do John Lewis vouchers, but many clients choose to do Amazon vouchers, and we've had a couple of clients recently that have chosen to do Airbnb vouchers, and these are completely tax allowable for the business. Additionally, capital allowances allow you to deduct the cost of certain business assets like equipment, machinery, and even sometimes vehicles. And don't forget about R&D tax credits. You don't necessarily have to be a high-tech company in order to qualify for those. So there are a number of benefits that you can claim to reduce your tax bill and actually give you a bit more money or a reimbursement for costs that you are incurring. Another aspect of tax planning is tax efficient investments. Contributing to a pension plan, such as a SIP, are one of the most effective ways to reduce your taxable income, also while saving for retirement. And higher rate taxpayers get up to 40% relief on contributions. Pension contributions from your limited company are tax deductible for corporation tax as well. So an incredibly efficient way to get money out your business, not for now, but for the future. For reducing your personal tax, you might also consider using something like an ISA, a venture capital trust, or the enterprise investment scheme to benefit from generous tax relief on your investments. These options can help you grow your wealth whilst minimizing your tax bill. And don't forget that when you're putting money into any premium bonds, again, this is personally, the payouts are tax-free, along with the ability to instantly access your money. So this can be a really good option for parking cash for your personal emergency fund, and you won't get taxed on the equivalent of the interest that you're earning on that. So let's shift gears and discuss self-assessment tax returns. Filing your self-assessment on time is crucial to avoid penalties, and it's also an opportunity to optimize your tax position. Make sure that you have all your records, your income records, your expense receipts, and your dividend payments well organized in advance, so you have the data all handy and saved away. If you're required to make payments on account, you may need to plan ahead so you are not caught off guard. Payments on account are when you have to pay towards the next year's tax bill. And if you're just entering the payment account system, or if you have a growing business and you're taking more money home each year, this can mean that your January payment to HMRC ends up being much higher than you may initially expect. And then you will also have a 31st of July payment as well. So again, if you are not sure about all this, do make sure that you speak to your accountant and check whether you're going to have to make payments on account and what those might look like. Remember, missing the 31st of January deadline can result in hefty penalties, and it actually ends up going to daily penalties when you're late. So don't leave it till the last minute. And as we think towards the tax year end, there are several strategies that you can use to optimize your tax situation. Reviewing your profit and loss statement, making pension contributions, and potentially adjusting dividend payments are effective ways to reduce your taxable income. If you are a higher rate taxpayer, considering making charitable donations before your year end to benefit from tax relief. And don't forget to review any capital gains to see if there are opportunities to offset gains with losses. Now remember that we have our download for this episode, our comprehensive tax planning toolkit. So do check that out in the show notes to help you get organized. Now, tax planning can be overwhelming, but with the right strategies, it doesn't have to be. By taking a proactive approach, you can save money, reduce stress, and set both yourself and your business up for success. If you're ready to take control of your taxes, do make sure you download that toolkit, which includes a bunch of tax planning resources for you to utilize. Thank you so much for tuning in today. I hope you found this episode helpful. I know your time is incredibly precious, so thank you for spending some of it with me today. If you enjoy this episode, I would love if you want to subscribe in whichever podcast player you happen to be listening in. And whilst you are there, please do leave us a review. It is the way that other people find us and can benefit from the podcast as well. So it would mean a massive, massive amount to me if you got value today to leave us a review. Thank you so much for tuning in, and I'll see you in the next episode.